some of the moving stocks and stories here. Jenny Horne, markets correspondent here on Schwab Network, to talk about what's going on with Nvidia, U.S. curbing AI chip exports to China. Tell us a little more about that.
Yeah, and we're seeing Nvidia make a pretty massive move to the downside. It seems right now unprecedented to see a 4.5% move lower in Nvidia shares, a name that's still up over 200% this year. But on some concerning news today, the Biden administration is tightening some of these overall restrictions on China's ability to buy these advanced semiconductors, which then only is adding fuel to the friction with U.S. businesses to sell to the Chinese market. The Commerce Department on Tuesday did say it would significantly constrict exports of AI chips, making it tougher for a lot of these U.S. companies, as well as like Nvidia, Intel, to sell their existing products in China or introduce new chips given these various rules. The move does aim to sort of close these perceived loopholes in export controls that was announced about a year ago, which they themselves have faced strong opposition for, just given some of these escalating tensions. Of course, we did see Nvidia sell off about a year ago. I can recall a monster move lower in reaction to this news, but they've obviously been able to shake that off quite well. The exports of Nvidia's A100, H800 chips will be restricted. The rule does specifically expand the license requirement for advanced chip exports to more than 40 countries, per reports we've gotten from U.S. officials. It also expands license requirements for chip-making equipment to 21 countries other than China and U.S. So that's or other than China, so that is also per these officials. So it's going to be interesting to see how this impacts more than just obviously Nvidia, but I think for a name that has risen so much, that has gained so much of the AI attention, it is important to note that we could see some weakness here, and we could see perhaps what has been such a high bar set forth for the stock. We could see the fact that right now these tensions are definitely going to be in focus for now these coming quarters.
Right, understood. And you see all the names here, as you noted, AMD and all of these lower today. Thank you for that. And then Bank of America, one of the banks that we focused on, beat the street this morning. Tell us a little bit about Bank of America.
So Bank of America did say that they had a really nice third quarter. We have a nice 1% lift, hanging on for dear life here amid some of the overall selling in the market right now, Nicole, like you mentioned. But they did say their net income for the quarter was up 10% to around $7.8 billion, or around 90 cents per share. That was higher than the 81 cents per share reported a year ago. Revenue rose to $25.2 billion from $24.5 billion a year ago, and did come in slightly ahead of estimates. Now, Bank of America, they said all in all, their net interest income was lifted by a lot of this revenue growth in credit cards and capital markets, despite the modest rise in deposit costs. While continued reserve build is another sign of now some responsible growth when looking at the company. Now, their CEO did say the bank added clients and accounts across all lines of their business, and they managed through a healthy but closing economy that saw the U.S. consumer that is still facing some headwinds, obviously, on a year-over-year basis. All in all, though, their global markets revenue still increased by 10%. They added 200,000 new consumer checking accounts and 1.1 million credit card accounts. And what's interesting to me is when you look at the performance of Bank of America, for example, it's down 18% this year, because this name does perform. I know it's a major bank, but it tends to perform more like a regional bank. It's a different kind of bank than, say, a JP Morgan or Wells Fargo. So that sort of speaks to some of the underperformance we've seen this year, down 18%.
Okay, thank you for all of that. Jenny Horne, nice to see you. Thank you.